Important question the markets are facing today is what next after the resounding victory of the Congress in the Karnataka elections? Something that surprised everybody. How will the markets treat this? Now, to discuss this, who better than Amisha Vora, who is the chairperson and MD of Prabhudas Lilladher. Amisha, good morning and welcome to BQ Prime. You are an expert
Good
on
morning.
this. You're an expert on this matter, and you have seen many elections. You have seen many bull and bear markets. How would you read Karnataka elections, the Congress resounding victory that we are all facing today?
So there are quite a few important pointers that we need to keep in mind. Karnataka is a big state and it's the fourth richest state in India. So it's a very important state which went into elections. Also, that last time Karnataka had contributed almost 28 seats to Lok Sabha for BJP. And that was a good number. That's a good number which helped the BJP in central Lok Sabha elections. One important other point is that the vote share of BJP has still remained same at 35%. But it's because of the vote share of the others getting consolidated that it led to such a big swing in the seats that is won finally. And last but not the important, but the least point is that a lot of freebies were announced to swing the local mood away from the national issues. Once we consider all these 4 points and see the total number of seats that Congress has garnered, it does give a caution to market.
Okay. Now, before I get into details of the markets, how much would you extrapolate this and what lessons are there? See, in any case, the elections are coming up, general elections are coming up just a year down the line. And before that, we have elections in Madhya Pradesh, we have elections in Rajasthan and Chhattisgarh. Now, these three states are also, they are pretty close to the general elections. Taking lessons from Karnataka, what can one expect? Are you looking at those elections before, say, changing your outlook for the markets?
No, I'm not much changing the market, but I'm saying that this was an important state, and to long-term investors, it will put a little caution. About the other states, I think that it will also yet to be seen as to how BJP is now strategizing going forward in some of these states which are due for elections. Because it's very important that on the whole, as now South seems to be on a state level completely out of BJP, that they will have to continue to hold or rather regain some of these states. But it is not going to be very easy, particularly when it comes to even Rajasthan. And it may be equally interesting to see how they strategize and how they bounce back.
Right. Now, so basically, Karnataka was the last bastion of BJP in the south. Now that is being shaken and that's being threatened. Madhya Pradesh is coming next. My concern is how would maybe it's a little too early, but then we need to be careful and analytics have to go into. I'm sure the markets know better than I do. How would we look at a scenario, let's say to 2024, it's still about a year away. What are the possibilities? Will there be a reduction in the vote share for BJP, or will the seats change? Will JDS, Congress, the left, and the DMK form an alliance and throw up a very strong challenge to the BJP?
See, it will be very speculative to say what will be the outcome, but final outcome of elections. But a certain trends will definitely emerge. One important being that a very rich state coming into opposition emboldens them with both resources as well as overall courage to continue to do what they did in this state, which is giving a lot of freebies as also fighting united way rather than uh, you know creating disputes or shows amongst themselves.
Correct.
So united opposition, little more resourceful opposition, and doling out freebies opposition, if these three continue to remain and emerge as trend, then I'm sure uh, we all as market participants will be more cautious and careful about that emerging, and it can have its own long-term implications on our fiscal reign also.
All right. So let's assume, see, the markets have been very strong over the last 3 4 weeks. The sentiment has been bullish. Earnings have been very good, except maybe for IT. Banking sector is leading. Now, in a situation like this, will you wait and watch? Will you reassess? What will be your approach? Let's say today, medium term, and slightly longer term.
I guess today market may give initially a little uh, correction, but because that the overall trends on a macro front are turning out to be slightly better than before. For example, globally and particularly for sure in India, we are at the peak of interest rate hike cycle. So we do not expect interest rates to go up much more meaningfully. Rather, they will hang around here or gradually taper off, which is very positive for markets. Oil prices being where they are, though of course it suggests a kind of a recession globally, but for India in the short term, it's very, very beneficial from inflation perspective. And overall, when the dollar index is also on a slightly receiving end, the other currencies, including rupee, will have a slightly push. So when we put all these factors and we assume that the FI inflows, which were extremely negative last year, and it just started tickling in if they continue, and we couple it with the domestic SIP outlook, which is sustaining, we feel that the market in short term will continue to be in the same trajectory of recovery that it is, but for a correction for a day or two now.
Right. Okay. So let me shift focus to the fundamental factors and the macros, which we are going to face. Rate, the cost of funds will flatten and it may even come down. But going forward, do you think that populism will catch up, expenditure will catch up, and therefore macros could go out of control?
So I feel that from the central government perspective, a lot of emphasis is given in completing a lot of infrastructure budgets as well as infrastructure projects. Now that is very, very positive because it has this huge positive multiplier impact. But looking at the overall election fever, I mean the election outlook,
Yeah.
if some of those sensitive points, like there are certain schemes which Congress has been talking about in their states in terms of pension, change in pension system, if nationally that is to be adopted, that will again keep a little dent on the exchequer and fiscal, consolidated state central fiscal overall. And yes, if the freebie trend, which we are trying to eradicate, but if that continues on a very strong wicket, that definitely when you consolidate the state and center together as a fiscal deficit, which is what globally people see, it will continue to have a dent on our fiscal discipline.
Right. So, how would you, what would you advise to, let's say, retail investors at this stage? Because the fundamentals are strong, earnings are good, economic outlook is not that bad, in spite of the elections. So, would you advocate people to keep buying every time there is an opportunity in the market, because the markets are going to be volatile from here, I guess?
The markets, if you see in the past 1.5 years also, has been flattish to range bound. And we believe that markets will continue to remain in a particular range only. But because of this very good economic activity compared to the world at the moment in India, we feel that the good support markets will get in terms of any correction. Also, we should not forget that apart from this little uncertainty, which is triggered by this election outcome, uncertainty being that the continuity of the policy and continuity of the regime is what market fears, not anything otherwise. We also have to see how El Nino really impacts India, and does it lead to any unseen outcome in terms of inflation. Though I feel that if the oil prices are like this, it will get counterbalanced. But these are a couple of challenges which we need to navigate, which will keep a cap on the upside, while very strong economy will give a bottom. So the overall view is that the market would remain range bound because the interest rate have peaked out and it can probably come down gradually. The momentum in mid cap will continue to be very strong.
Okay, you're emphasizing on mid cap, but what about large caps? Large caps are especially banking. Let me focus on banking sector. How do you see the banking sector over the next 1 year? Because I think there will be some pressure on margins, if not too much. How would you look at banking sector? Because banking is what is still driving the benchmark indices.
So in banking, we are, as we all know, the banking balance sheets is at the best, both all in terms of asset quality, provisioning, NIM, and credit growth. So all four counts, the balance sheets are at the healthiest most. But this being the election year, and as what we say, the freebies are counting a lot in terms of where the electorate minds are going. In last 1 year, we saw a lot of PSU banks handsomely started participating, having the same traits at clean balance sheet and so on. But a little cloud of worry, I would think, that will emerge on that. It is too early to say, but if we take a long-term view, that will cap their upside. And private sector banks, I think, will continue to do very well.
Right. I think on that note, I need to conclude this conversation. So basically, you're saying be cautious. It's still some time away, and the fundamentals are strong. The inflation could come under pressure because of possible El Nino, which may not even happen. But rate and the cost of funds will go down, and nothing to worry as of now. Just to be a little cautious is what Amisha ji is advocating. Thank you so much, Amisha, for joining us. Stay tuned to BQ Prime.